Z101.9 FM with me, Trebi Hammond. We get into the conversation now. Sorry for all the glitches and all of that. But so we're talking about producer price inflation this morning, and we're saying that beyond the numbers that we're hearing, 3.5% in June 2026 from 5.8% in May 2026, I want to understand exactly what this really means and whether we're going to, whether it can eventually translate into lower prices for consumers and all of that. And John Che, a financial analyst, joins me over the phone lines for this conversation. John, good morning.
Good morning, Mr. Hammond, and good morning to all your listeners.
Yeah, John, I hope you're doing well.
Yes, I'm doing well.
Okay.
I think the only problem is, the renewed tensions in the Middle East causing, oil price to rise. So if you check the pump, you realize that most OMCs are significantly increasing their prices. And that is a major worry at this moment.
I'm sure we'll have conversations on that one of these days, and then we'll look at it a bit more. But for now, let's focus on the producer inflation as we've tabled. Now, let's start with the headline. Now, Ghana's year-on-year producer price inflation slowed from 5.8% in May to 3.5% in June 2026. For the ordinary Ghanaian listening to me this morning, what does this actually mean?
Yes, I think in simple terms, it means that producers are receiving lower increases in prices compared to the previous year. It means that they are witnessing the prices are going up, but it has reduced. The rate at which it's going up has significantly reduced, and I think it's a very good indicator that things are, getting back to normal. The only issue is that if you go into the numbers, you realize that it is a particular sector which constitutes about 46% of our basket driving the price down. But looking at all the other factors, it looks like still there are price pressures building up. Okay, and so we have not really arrived yet because I think just the mining sector that is significantly experiencing this decline. But all the other sectors like utilities, go to construction, go to manufacturing, they are all experiencing uptick in their inflation. And so, and I think the understanding is that it looks like, you see, in the mining sector, we are seeing I think in the month of June, we saw, a decline in good oil prices. And that could be a major contributor of what has been experienced there. So it's not really like, a general decline in producer price index across the various sectors. It's just the mining sector experiencing that. So we are not out of the woods yet, especially when fuel price is still rising, and that is still, something that we need to watch to see how we can curtail the current development.
So is that to say that this is just a positive, monthly movement and not necessarily an economic turnaround?
Yes, I think it's just a monthly improvement, and as I said earlier, it's basically about the mining sector. So it's not really across board that is experiencing the decline. It's just the mining sector, which is, significantly impacting the price. What it suggests that, in terms of retail price, maybe at the gold, industry and then other mining areas, maybe for them, they will see a decline in their prices. But as far as the general consumer, products are concerned, I think that will not translate into that. Okay, because inflationary pressures are still building up. And so it's not really, sometimes when these numbers come up, if it was a general decline in every aspect, then that would mean, we are going to see some reliefs in our basic consumer items. But it looks like that is not what is currently happening. So it's more sector specific, driving the price down, which in itself, even though generally is good, but consumers should not expect a miracle decline in their retail prices.
I see, John. Let's provide some education here and try to understand the producer price inflation proper. Now, many people understand consumer inflation, of course, because it shows up when they are buying their goods, and services and all of that. But producer inflation is less familiar. What exactly is producer
Yeah.
price inflation?
Yes, yes. So the producer price inflation is more about, how, the prices that producers are also facing at the farm gate. So let's say if you take a typical manufacturing company, they also have input costs they use in their manufacturing. If you go to the construction, they have input costs. If you go to the mining, they have their input costs. So normally, whatever it costs that they incur, they normally pass on to the retail businesses that they normally sell to. So the producer price is more about how the manufacturers, the producers are selling to the retail businesses, or let's say the wholesale businesses. Then maybe from that point, then it comes to the consumer. And the point is that if, let's say, the manufacturers are, selling at a high price to the retail businesses that they also sell to us, then it means that that cost will be passed on to us. So I think in simple terms, you should understand the producer price index to be let's say, the farm gate price. So for example, like the way, farmers, we have some people in Accra, traders, they go to the farm and then they buy products and then they come and sell to us. So basically the price that the farm and the traders go to the villages and all other places to buy, their products before they sell to us. That is basically the producer price index. So the point is that once the traders, or let's say the wholesale companies, or let's say the retail companies, are receiving higher price at that point, then it should give an indication that the producers too are experiencing high costs. That's why they are passing on to the retail businesses. And we also expect that the retail businesses will also add it to their costs. And I think what I'm trying to say here is that it looks like it is not what the current inflation is not being experienced across the sectors. It's more of those that deal with the mining companies, those that deal with those are the people who are experiencing a decline in their price. If you look at the month on month, they are still also experiencing decline in their inflation. So at that particular industry, we expect it to translate into the consumer price index. But apart from that, if you go into the transportation, utilities, construction, manufacturing, they are still seeing, some of them are even seeing very significant push in their prices. If you take a typical sector like utilities, about 12%. If you take, construction, it's about 10%. So what it means is that, in those areas, we are still going to see a build-up in price as far as the consumer side is concerned. And that is why I'm trying to say that, this is not really across sectors for us to believe that we are going to see a decline in our retail prices. It will be more of a sector-specific benefit that the mining sector will enjoy. But I'm not expecting it to translate into, a lower consumer price index, because you see what builds into our consumer price index is more of the food items. You get it, the food items, and seeing that the food items are still rising at the producer side, then I don't think we will have that benefit.
I see. All right. Okay. So why do economists actually generally pay attention to that?
Yes, it is. In fact, it is the most significant indicator of what is likely to happen in the future as far as consumer prices are concerned. So you see, whatever the producer the producers experience, they will pass on to the consumers, because at the end of the day, it's the consumers that consume their products. You get it? And so what it means is that, so we are always, normally, personally, I'm always looking forward seeing the numbers. And I think, for some months, inflation was picking up, and I mean, producer price was picking up. So it means that producers were experiencing high costs, and as a result, passing on to consumers also means consumers will also be seeing that high cost.
Right.
But now that we have seen a decline, then that should have given us, some rest to say that what we are experiencing at the consumer side, will not continue. So, we should all be happy. But we can't be happy, because there's something very significant to our consumer price index, which is significantly rising. In fact, if you look at the producer price index, you realize that even utilities went up. Utilities went up by about 10%. And looking at even the current situation where crude oil price is still rising, it gives you an indication that we are still going to see a significant increase in utilities, significant increase in especially when it comes to electricity costs and the rest. So when that happens, that will significantly impact how we also buy from the retail companies. And so it's a very significant indicator. If we are seeing maybe a decline across board, then that will give us, rest to say that, prices are going to go down, because we expect that if producers are experiencing low costs, they will pass it on to us. So that is the major, concern here, and that, we have to pay attention. I think today, utilities, we go also see electricity costs and the rest is being fueled by fuel costs, because we use fuel here in Ghana. We have the power plants, we use fuel. So once fuel prices rise, and electricity costs will rise, and that will not make us benefit from this decline that we are seeing.
I see. Now let's look at the drivers of, just before that, you spoke about the fact that, there's actually a whole value chain or a supply. I don't know whether to call it, a trend or a journey.
That's a supply chain.
Yes, a chain or a trend. Yes, exactly. That. How long does it typically take for, lower production costs to reflect in retail prices?
Oh, no, typically, it normally takes about a month. You see, the way we report our producer price, you realize that the consumer price comes first. So if you look at the June consumer index, consumer price index, it came earlier. I think at the beginning of July, they released that, but the producer price index delayed a bit. The same June is coming around 20th, which is talking about what producers are also experiencing. But we expect that whatever producers experience in the last month, that will take effect in this month, July. So mostly 1 month, because especially in sectors that do not take very long time to get the products to the market. So basically 1 month. So normally, once we see, let's say, a decline like this, then July inflation will come down a bit if it was across board. If it was across the board, then can we expect that the July consumer price index will come down? But you see, as I said, what is moving this index is just really the mining sector. And I think I mentioned that the mining sector, in our producer price index, we have weighed the mining sector around 46%. So it's very significant. So if there's a serious, and I think the reason is because the mining sector supports our economy in terms of everything, like gold now being the anchor of our international reserves and everything. So that way high on our producer price. So as far as that one is concerned, it will be good to us. So overall we will see a price decline this month. But as I said, there are other areas very critical to the consumer, which is significantly moving up in July, especially fuel price. So maybe if not that, I would say we are likely to experience a lower consumer price index for July. But I mean, seeing you, I don't know if you have noticed, and now, fuel prices we're jumping almost every 2 days, every 3 days. They are not even waiting for the pricing window to change their price.
Yeah.
Yesterday, I saw company like Star even increasing their price far beyond the full price provided. Clearly, it's telling you that the producer price section price are really rising, and the fuel companies cannot even wait for the next pricing window to, otherwise, I mean, they'll be incurring a lot of losses. And so I'm not sure this positive development will translate into consumer pricing, a lowered consumer price index for this month.
I see. All right. Let's try and see if we can understand the drivers behind that. But just before that, let me announce the lines. In case you're listening to us, this is Business Breakfast on Z101.9 FM with me, Trebi Hammond. This one, we're talking about producer price inflation and what exactly it means for everyone else. I mean, for businesses, for individuals, for consumers, and also for the ordinary Ghanaian. And you're free to join the conversation. Send us a WhatsApp on 0544-321019, 0544-321019, or you can also call us on 030395661, 030395661. I'd love to hear from you this morning. Send us a Facebook comment or drop a comment under our live stream at ZFMGH on Facebook and Z Multimedia on YouTube. We'd love to hear from you this morning. John, let's continue. So the GSS actually says that the slowdown was driven largely by moderation in prices within the mining and quarrying sector. Why does this sector have such a significant impact?
Yes, so I think I mentioned that in our producer price index, we weigh mining sector very high. I think it's around 46%. So it means that if you're looking at all production centers, the mining is constituting about half of our index. And I think I mentioned that the reason is that you see Ghana, goods form very significant portion of our exports.
Yeah.
Do you get it?
Yeah.
And also form very significant portion of our earnings. So because of that, I mean, we have attached serious, weight to that sector. And because most often, whatever happens to that sector normally translates into, larger impacts on the whole economy. Today, if gold prices even assuming, let's say fall by a very significant margin, it's going to affect a lot of our export numbers will reduce drastically. Our international reserves that we now have gold reserves constituting that international reserve will also reduce significantly. So it means that it is seriously going to impact the economy. Yeah. And that is the reason why we have attached a very high weight to it, so that whatever happens there can give us a clue about the health of the economy. So that is basically the reason we have attached so much importance to the mining sector. Okay, and that's why I mentioned that, because it declined significantly. If you compare last year to this year, that's why you are seeing producer price index still getting back to the 3.6%.
I see. All right, let's look at the impact on businesses. So for businesses, especially those, especially manufacturers and even SMEs, what does this mean for them? The falling producer inflation, what does it mean practically?
Yeah, I think unfortunately it's not really good for them in terms of the overall economy, where normally it determines macro economic stability. International reserves of the Bank of Ghana. On that front, it's going to help all of us. Because what it means is that, the prices at that point is low. So, in terms of the overall economy, it's going to benefit the overall economy to allow Bank of Ghana to do what they need to do, to allow the fiscal side to also do what they do. But the issue is that when you come to the specifics, the problem is that the manufacturing sector is still experiencing high inflation. I think they experience about 12.5% inflation for just 1 year. The construction is also experiencing, high inflation. Service sector is also experiencing, inflation. So the benefits will come from the overall economy impact, where, I mean, because, I mean, it is going this way, the CD will continue to stabilize, and therefore, even if they import anything, they are not going to see, I mean, serious impact on the volatility of the currency. So in that broad areas, I mean, we'll be fine. I mean, everybody will be happy. So in terms of the drivers, I mean, the economic drivers that normally also impact the activities, I mean, things are going to be smooth for them. So on that side, we don't need to really worry. But when it comes to the individual company, that is where they have to, I mean, look at their, I mean, build up costs. I mean, this is the right time to also look at your costing very well to see where you can, I mean, be more efficient in making sure that, I mean, your sector is also, I mean, experiencing a decline. So you have to be more active in looking at your costing, looking at how you can reduce some of the expenses, okay? So that, I mean, as far as, I mean, the manufacturers are concerned, as far as, I mean, construction companies are concerned, they look more inwardly to also try and manage their costs. When that is done, I mean, as far as the overall economy will take good shape and do well, then there will be no need to worry too much. So it will be more of, I mean, sector specific, trying to, I mean, manage your costs efficiently in order to at least benefit from this entire movement. Because the point is that, you see, if you don't do that, if the various sectors don't try to look at their costing and reduce it, and I mean, they continue to experience, you know, high costs in relation to what they do, that is really going to challenge, I mean, Bank of Ghana to also think of how to control inflation. And once that happens, then they take, I mean, decisions to, I mean, influence overall interest rates, and then everybody suffers. So I think as far as what's normally influence overall economy is doing well, the other sectors should look into their costing and find ways of manage their costs efficiently, so that, I mean, they also experience, I mean, whatever is happening currently.
I see. Right. Okay. So, you know, we have experienced, generally, Ghanaian businesses, you know, have experienced or faced high costs from energy, fuel, imported inputs, and exchange rate and all of that. Are you saying that this latest data doesn't suggest that the environment is becoming easier?
No, I don't think it's becoming easier, especially, you know, when there are some sectors that are still, you know, facing a lot of challenges. You see, in the Ghanaian economy, most often, places where we really struggle with, I mean, it's exchange rate volatility. But now, as far as, I mean, the overall picture is concerned, we have curtailed that, so that is out of the picture. But there's another element that is really worrying, and that is more of a global issue that you don't have direct control.
Right.
I think I was listening. No, this week the MPC is meeting, and they are thinking. I'm sure the major concern to them is fuel price, and you see, and it's something you have no control. You can't do anything about it. You just have to watch. The only thing we can do is that, I mean, looking at maybe what is currently happening, then we are thinking of being more locally dependent, locally independent. So, focusing more on local refineries, but those things normally takes time. So it cannot be a near or immediate measure. That may be a long-term measure. I think I listened to the energy minister, and I think he was looking forward to that. I mean, strengthening our refineries is good, I mean, the long run. But currently, it's like your economy is on the mercy of a global attention. You can't do anything about it. And your hope is that it doesn't escalate more and become a very big problem to all of us. Okay, so as far as, I mean, the tensions are still ongoing and fuel prices are still rising. Just last week to today, price has risen to about $85 and started declining a bit. So it clearly shows that, I mean, the major critical factor that drive a lot of prices are still rising. Today, look at the pumps. Even Star Oil that normally says low, they are going go around 16.99. No, diesel also, diesel around 16.99, petrol around 14. It clearly tells you a picture that things are not too okay. Do you get it? And so it's important that, I mean, some of these things, maybe the intervention that, and I say I've been pushing that we shouldn't allow anything to disturb our economy. And I feel everything happening currently is more temporary. And we shouldn't allow temporary issues to, I think when I was speaking to Nana on Monday, I mentioned that we shouldn't allow any temporary issues to disturb. Because the point is that if you allow it to disturb and it pushes the things out of control or makes you make some decisions that will be difficult to reverse in the near term, then whatever you have done for stabilization, now trying to grow your economy, will not materialize. And everybody will complain. Now, you said inflation was single number. This was that. What have we experienced? We are not seeing employment at large scale. We are not seeing improvement in our lifestyle. We are still witnessing high cost of living. All those complaints will come back. And then as a government, you feel everything you did, all the sacrifice the Bank of Ghana have to do to make a lot of losses. They didn't really do, benefit us as a whole. So it is important that maybe at this moment you are more active, like the way we intervene when prices went above 16. We must also intervene again. I mean, I think government must think through to intervene again to bring costs down. We can't allow these costs to continue moving almost every day, making consumers planning everything out of hook. And I mean, a whole lot of challenges. So we have to, I mean, intervene and stabilize our economy to get to that growth. It is very critical and very important we do that.
I see. All right. Maybe my last question to you before we go is that, so does the falling producer price, does it change the outlook for our consumer inflation in the coming months?
Not at this moment. Not at all. At this moment, I'm still expecting the consumer price index to rise again, especially, because if you look at what goes into the basket, you realize that the major things that go into the basket are still experiencing inflation. Do you get it? So if let's think a utility was the one driving the producer price down, if it was, let's say, manufacturing that is driving the producer price index, that will give us the confidence that indeed that we are going to see, I mean, consumer price index also falling. But at this moment, the mining sector, I don't think, I mean, how many consumers in Ghana, I mean, buy from the mining sector? You get it? Yeah. So overall, we are not really going to experience a decline. I'm expecting an increase, maybe to our target of 6% for July. And then we will look at the global development and see whether, I mean, things will be better. And as I mentioned to you, that even what is even another factor driving the mining sector price down. It's also the result of, I mean, gold prices falling in June. I mean, you saw gold prices falling from about $4,700 at the beginning of June to about, I mean, 4,000 at the end of June. And that is a major contributor of, I mean, the decline in inflation. So it's not really something. And, even that's even going to impact our gold reserves value and all that. So overall, I mean, I'm not expecting that to happen in this month.
All right. John, thank you very much. I'm really grateful that you joined me this morning for this conversation.
You're welcome. And thank you for the opportunity.
You're most welcome. Please do enjoy the rest of your day. All right. So that was John Che. He's a financial analyst, and he joined me this morning. We looked at the producer price inflation, the numbers that were released by the Ghana Statistical Service just yesterday. And he says that, I mean, because the improvement we are seeing is not broad-based, it's only in the manufacturing sector. We might not entirely see some changes in prices of goods generally. Yes, but maybe if you're in the mining sector, if you're in the quarrying sector, then that's actually where maybe some real impact will take place. And so that is basically what we've discussed this morning. But if you miss any part of the conversation, you can head to our YouTube channel. We are on YouTube at Z Multimedia. We'll post a video there. Please feel free to go play back, and then you make sense of exactly what we've spoken about this morning. All right, so that will be all for today. We're back again tomorrow for some more interesting conversations. But until then, keep listening to Z 101.9 FM. My name is Nichrebi Hammond. I'll see you tomorrow when you think Ghana thinks Z. Up next is The Brighter Side with Jeremy Okoria Marco. Please don't go anywhere.